Welcome back to the channel, everybody. I am Mick Alfany. We're going to begin right here. This is an article on Cointelegraph.com. We just continue to get unbelievable information. And I'll tell you what, the West, the United States in particular, better prepare themselves. They're very unwise. Here's the title to this article. More than 186 U.S. banks, 186 U.S. banks well positioned for collapse. Do you see how the implications are unbelievable? Did you see how the people reacted just from Silvergate and SVB? They were panicking. They were lined up outside the banks trying to take money out. They ran to gold and silver. Finally, we've been telling people about gold and silver for about a year and a half. We've been doing gold news here. They bought so much gold and silver. You know, some of my absolute legends on the channel were telling me, hey, gold and silver was running out. We didn't have to worry about that. We got into gold and silver very, very early, long ago, nice and deep. But they were panicking is the point. Let's read this little tidbit here. But here's the thing. Well, before we read that little tidbit, this bodes well for the new financial system. The banking system is collapsing. The new financial system, it might be able to be used outright. We might not even need the banks. I've been saying that for a long time. We could take it all. We could move it all. We can do it with ease. Let's read this little tidbit here. Rising interest rates. Oh, that's the problem. I love when they lead off with that. Sure, that's one mechanism that exacerbates the problem. However, they've done a lot of bad business. There's a lot of bad monetary policy. All the pros are saying the same thing. So it's not just rising interest rates, but let's continue on here. Rising interest rates, which brought down the U.S. banking system's asset market value by $2 trillion, which is significant, combined with a large share of uninsured deposits at some U.S. banks, threatened bank stability. Well, like I said, there's a lot more to it than that, but I guess they're trying to give a simplified version here. Let's continue on. The perfect mix of losses, uninsured leverage, an extensive loan portfolio, among other factors, resulted in the fall of Silicon Valley Bank. And remember, at that time, there were a few banks we were covering, especially in the members only video, last one I put out. Wow, there were so many more. I knew it was going to be more of a ripple effect. And I guess what we were seeing was the first ripple, right? No pun intended. It says comparing SVB's situation with other players revealed that nearly 190 banks operating in the United States are potentially at risk of a run. It's going to be chaos. Oh, and I have an article here somewhere. Don't worry, we're going to get to Casper also at the end so I can keep my word. I always keep my word. I just take my time in doing research. But there's an article here where the people are starting to download en masse crypto apps. It's almost like they're getting forced over to the new financial system. You know, well, we'll get to that in a moment. It says, while SVB's collapse came as a reminder of the fragility of the traditional financial system, yes, it's horrible. A recent analysis by economists showed that a large number of banks are at risk from uninsured deposit withdrawals. It read, quote, even if only half of uninsured depositors decide to withdraw, almost 190 banks are at potential risk of impairment to insured depositors, with potentially $300 billion of uninsured deposits at risk. Monetary policy, think about how that affects the liquidity. So it wouldn't just be them. They pull their money out, everyone else is going to want to pull theirs out as well. Why? Because they're not going to want that capital to get stuck in those banks. There won't be liquidity. The banks barely have liquidity as it is. I say that they don't have any liquidity, but we know they've been getting injections from various sources. That can't continue. They can't. Let's continue on here. Monetary policies pinned down by central banks can hurt long-term assets, such as government bonds and mortgages, creating losses for banks. It's all a setup. I mean, they created the problem. Now they're coming in with a solution that exacerbates the problem. It's a never-ending cycle until there's a full collapse. It's unbelievable. And they refuse. Here's the thing. We covered monetary policy on the channel for at least a year. I know we've slowed down now, but for about at least a year. And they refused. It was mind-blowing. They refused to significantly change monetary policy. If you don't change monetary policy, how are you going to make things better? Which would lead me to believe that you want things to remain the same. Maybe they're just that greedy and they want the money and the power. But at the same time, your system is going to die. Maybe you want that new financial system to come in, XRP, XLM, Algorand, you know, the ones that make everybody a ton of money, not just by holding the protocol. That's the least, but by actually utilizing the protocol. You think they don't know that? They know that. That's why all the big banks are in. We'll get back to that. Let's continue on here. This is unbelievable. New financial system coming in hot, folks. I don't know when, but it seems that everything is moving at a rapid pace. And the collapse of the legacy system definitely is lending to the rise of the new financial system. It is. Regulatory clarity or not, it is. People are downloading in mass crypto apps like never before. Coinbase, Binance. Once again, I'm going to get to an article at a later chapter. Chapters are below. We'll get to that. Let's continue on here. It says the data in the above graph represents the assets based on bank call reports as of Q1 2022. Banks in the top right corner alongside SVB have the most severe asset losses and the largest percentage of uninsured deposits to mark-to-market assets. They wrote that in a strange way. The recent rise in interest rates, which brought down the U.S. banking system asset market value by $2 trillion, combined with a large share of uninsured deposits at some U.S. banks, threatens the bank stability. Quote, recent declines in bank asset value significantly increased fragility of the U.S. banking system to uninsured depositors runs, unquote, the study concluded. Well, first of all, they said when it came to SVB that before the regular people had a run on the banks, that there were companies, big money individuals that came in and they pulled out 42 billion. That's really strange. So it wasn't the regular people, the regular runs. When you say runs, you think like everybody's running to the bank. It wasn't that. There was a massive amount of capital pulled out before. And that's what really triggered everything, which is suspicious in my humble opinion. How do they all know to pull their money out at the same time? Well, we know how. I'm being rhetorical here, but it's suspicious. Anyway, let's move on to this next article here. My word, so many things are happening here. It's unbelievable. So this article here is titled, Washington Goes Back and Forth with Crypto. Here's all the buzz in one place. This is from zcrypto.com. They're doing a great job. Make sure to check them out. I hope you all are doing well out there. I appreciate every single one of you. You know, thank you. Thank you so much for being here and showing me love. You know, I love you back. Just know that. All right. It says here, Washington government officials have continued to view cryptocurrencies skeptically, and things might get grimmer. Although I almost read that as grimier, grimmer for the fledgling asset class. Is that so? They can't avoid us for long if the bulk of their system is collapsing. They cannot avoid the positives. I almost believe that they're doing this in order to force people's hands when it comes to deploying the new financial system. This way that people cannot deny that they need to use the new financial system because so many banks are getting risky. This is getting to be a risky environment dealing with the banks. But let's continue on here. It says the U.S. Senate Committee on Banking, Housing, and Urban Affairs recently met in an open session to conduct a hearing on digital assets in response to the turbulence plaguing the markets. The hearing, titled Crypto Crash, wow, why financial system safeguards are needed for digital assets, that always upsets me a little bit. I'm well in control of my emotions, but that just really is a thorn in my neck because their system is so terrible. They lose people's information. They're getting hacked every single day. Half their banks, I won't say half, but a myriad of their banks are positioned to collapse. And I'm just holding back on saying even more than 190 But there are a lot more than 190 positioned for collapse. And even when that 190, if that does indeed happen and it collapses, it's going to create an outward ripple effect that's going to expose even more banks. Their whole system is a house of cards. A few cards fall and the entire house starts leaning a little bit. But they always point the finger at crypto. But we know what that is. You know, they're trying to divert people's attention away from the real threat, which is the legacy financial system. Lee Reiners, policy director of Duke Financial Economics Center, testified before the House, offering several suggestions on the way forward in regulating the asset class. Reiners suggested crystal clear disclosures for digital asset service providers and legislation precluding firms from mixing customers' funds with their holdings. Okay, yeah, see, now that's reasonable. Yeah. Other witnesses, but what they were doing, they're trying to be like the banks, which take your money and then they lend it out and make money off of your money while handing you the absolute tiniest piece of increase on your capital possible. Oh man, the banks are just this highway robbery, literally sticking people up. Oh man, but people love their savings accounts. They definitely do. Hey, to each his own. It says here, previous hearings on crypto have bounded off between promoting innovation and increasing regulatory and enforcement activities. A hearing back in late 2021 involving leading cryptocurrency executives seemed to indicate that the U.S. was poised to become a virtual currency paradise. And that's the trick. Yeah, a lot of us felt that way from the verbiage. In the back of my mind, I always keep in mind, never trust politicians. And we found out once again, you can't. Because as this says here, everyone was like, oh yeah, everything sounds good. And then what happened? They turned around. The scorpion stung the turtle, stung the frog. You ever heard this, the ancient story of the turtle or frog that takes the scorpion across the river? And at first it doesn't want to. And scorpion's like, no, I won't sting you. Listen, I just want to get across the river. And so the frog or the turtle, being a little bit naive, believes the scorpion, lets it hop on its back, only to make it most of the way across. And then all of a sudden, when they make it to land, ow, what was that? The scorpion stung the turtle or frog. A scorpion is going to sting. And that's what the politicians are. They are a scorpion. Expect them to sting. So anyway, it says here, it seemed to indicate that the U.S. was poised to become a virtual currency paradise. But 12 months down the line, a different tune rings out. Yeah, because they're a bunch of traitors, Benedict Arnolds, cowards they are. And they're greedy for this fake fiat currency. They worship fiat currency. They're nothing without it. So they have to do anything. And this is where people get really, really grimy and dark. They'll do anything to keep the money so they can keep these fake lifestyles that they're living. Cracking down on staking, the SEC has placed staking within its crosshairs following a $30 million settlement reached with crypto exchange Kraken. According to the SEC, Kraken's staking program amounted to offering, we know all their spiel about securities and such like that. They're absolutely wrong, and they should be held accountable for being wrong, fought back against vehemently. So now, let's move on to another article here. All right. So, this is what I was trying to iterate here. This is from marketwatch.com. All right. Now we're getting a little bit of good news. And the article is titled, Bank Sector Stress May Provide Bullish Case for Cryptocurrencies. Yes, yes, yes. It is bullish. We're winning, folks. It's a patient game of chess. Okay. Patient game of chess. But we are winning. Their collapse is our rise. The phoenix is rising, people. Just slowly. And there's no guarantee on the outcome, but it is moving. Crypto companies' funds. Shares of Coinbase Global Coin were up plus 10.62%. They went up 16% for the week to around $67.33. MicroStrategy went up 11.03% and gained 14.4%. Thus far on the week. So people are becoming more bullish on crypto. Crypto mining company Riot Blockchain went up plus 14.89%, rallied to 27% to $7.04 as of Thursday. Shares of rival Marathon Digital Holdings, Mara, 7.08%, well, plus 7.08%, surged 39% to $7.65 over the past week. eBang International Holdings, eBond, was up plus 0.75%, traded 12% higher over the past week to around $6.74. So they are looking good. People are bullish on crypto. They see where things are going, at least the legit companies. And that's the way it always should have been. So shares of Block Inc. were down minus 1.48%, formerly known as Square, gained 2.6% to $75.69 for the week. So these are like the traditional ones here. Tesla was down minus 2.17%. PayPal is down minus 0.183%. You see where this is heading? The people are losing faith in legacy system financial offerings, and they should. And they should protect themselves. More than that, they should protect themselves and be careful. Okay, so now let's move on to another article here. This article here is from newsbtc.com, and it's titled, Tokenizing Stocks, Bonds, and Others Could Boost Capital Markets Efficiency. BlackRock CEO. We haven't heard from BlackRock in a while. It says, blockchain has brought a lot of changes to the financial industry. It first facilitated the entry of digital currencies such as Bitcoin, Ethereum, and others. It also improved many aspects, including insurance, money laundering protection, supply chain management, capital markets, trade finance, etc. Technology has also boosted the efficiency of other industries such as health. We know that Algorand is deep into the health field right now. Education, automotive, manufacturing, legal, etc. As the years go by, more use cases will emerge, further pushing blockchain adoption. I agree. For instance, BlackRock CEO Larry Fink recently suggested tokenizing assets such as stocks, bonds, etc. Fink believes that digital asset technologies could boost efficiency in capital markets. And who would be at the forefront of that? First, I want to throw out there LCX, but also then you have to throw in there Ripple, Stellar. As far as infrastructures, you can move this stuff across. Then you have Algorand, of course, with infrastructures and specialized offerings, of course. Hedera definitely will have a piece of that. So the bank coins are at the front of all of this. When you're talking about the tokenization of everything and moving that type of capital around and having that infrastructure and system be trusted and secure, yeah, they're at the forefront, in my humble opinion. Let's continue on here. BlackRock CEO sees tokenization as necessary for two reasons. Fink pointed out two things tokenization could do for the capital market. First, the chief executive officer stated that the strategy could make the capital market more efficient than it is now. Also, tokenization could give more investors access to the markets. Fink disclosed in an annual letter to investors that BlackRock is exploring opportunities in the digital asset sector. Keep in mind, who do they back? They back Coinbase, right? Coinbase is related to who? Closely. Circle, because of USDC. Who is the biggest pusher of Circle around the world right now? Stellar, XLM. So sort of vicariously, there is a BlackRock Stellar connection. Vicariously, it's a little light, but it doesn't mean it's going to stay that way. We'll see how this works out. It says here, Fink believes the digital asset industry offers more than Bitcoin issuance, investment, and trading. Further, he stated that many more developments are taking place beyond the widespread crypto usage. Fink believes that digital payment usage is overgrowing, okay? And even the collapse of top firms like FTX hasn't dampened the enthusiasm. Okay, I see what he's saying there. So he's positive, he's bullish on crypto. Okay, good, very good. As such, more innovative applications could one day emerge from the digital space to support the asset management industry. Are you hearing what this individual is saying? This is the leader of BlackRock. Once again, that was very, very telling. It says more innovative applications. I've always had this thought in my mind that Ripple, Stellar, Algorand, these Bankcoin companies, that they're sitting on innovations that are extremely advanced. They haven't unveiled them yet. They're waiting on regulatory clarity. They have use cases that will blow people's minds, applications that could blow people's minds. And I don't think that they've deployed these innovations just yet. I don't. For example, I think we saw a glimpse of that with Starlight Protocol on Stellar. When they came out and they said, hey, you can do 1 million transactions or more between two parties on Stellar. And I mean, that was such a leap. It hinted to me that, whoa, if this is what they're unveiling, what haven't they unveiled? Understand, when they unveil something, they're already working on the next level. I think that new financial system is going to be more potent than most people think. I think they're sitting on a lot of things, not just announcements. They're sitting on technology advancements. We will see. We'll see. I could be wrong, but I don't think I am, but I could be wrong. All right. We're back to China again. I told you there's been a lot of phone calls made to say, hey, listen, they had ex-officials calling back to China saying, hey, listen, we need to become the crypto hub. And it seems that Hong Kong is definitely open to becoming a crypto hub, right? So it says here, this is from cryptodaily.co.uk. Hong Kong's open crypto regulatory framework attracts new firms. There's a mass race right now to become the crypto hub, the leading center for cryptocurrencies. And I think it's going to come down to the UAE and Hong Kong in the future. I really do. But let's read this little tidbit here. It says Hong Kong is making significant strides towards becoming a global crypto hub, with the latest developments indicating that the city is positioning itself as an attractive destination for crypto-related businesses. Recent reports indicate that Signum Digital, a joint venture of CoinStreet and Summerly, has received approval in principle from the Hong Kong Securities and Futures Commission, the SFC, for its security token offering and subscription platform, which will be a pioneering development in Hong Kong. Cryptocurrency data firm Kaiko has also announced its plan to move its Asian headquarters from Singapore to Hong Kong. It's already beginning. There you go. Citing the city's pro-crypto policies and impressive recovery from COVID-related restrictions. And I think another thing a lot of people don't understand, and people can correct me if I'm wrong, but my understanding is that Hong Kong operates a lot differently than mainland China. Says here, security tokens, a new category of digital assets built on blockchain technology, represent ownership of tangible assets like private equities, real estate, art, collectibles. By being linked to real-world assets, security tokens lower risk for potential investors, facilitate research processes, and provide a foundation for the market value of the investment opportunity. According to Signum Digital, following the receipt of final authorization from Hong Kong's SFC, it will manage the STO platform using the brand name CS Pro. The STO platform is expected to create new investment opportunities for everyday investors, and it will be subject to the regulatory framework setup. So then we have an article here on News BTC. It says more people are downloading crypto apps like Coinbase, Binance. Here's why. According to real-time app data provider Apptopia, the top 10 crypto applications for exchanges and self-custody wallets have risen by about 15% since Silicon Valley Bank and two other lenders fell last week. Bank app demand drops. The recent shakeup in the United States banking system appears to shift interest and demand toward crypto solutions. Trackers note that since last week's crisis, there has been a remarkable increase in downloads of crypto dApps, offering exchanges and asset storage services. According to Apptopia, the top 10 crypto apps defined as Coinbase, Crypto.com, Trust, Binance, Bitcoin and Crypto DeFi Wallet, Blockchain.com, KuCoin, Kraken, eToro, and BitPay, comprising both exchanges and self-custody wallets, have risen by around 15% since Silicon Valley Bank stock fell 60% since last week. So once again, people are turning to crypto en masse. This is very interesting. Very, very interesting. So we're going to end off here with this article from Cointelegraph.com. It's titled Real World Assets Tokenization Lacks Infrastructure, Not Just Regulation. And goes as such. The next generation of securities and asset tokenization has been held back by a lack of infrastructure and regulatory standards worldwide, according to BlackRock's Larry Fink. The merger between DeFi and traditional assets, however, has been held back by a lack of infrastructure and regulatory standards worldwide, according to sources Cointelegraph recently spoke with. Quote, there simply haven't been good institutional grade systems for these companies to get involved. Obviously, they're not going to just run their whole system using a regular blockchain wallet and centralized exchanges. Tokenization is a path to fractionalization, allowing multiple people to own a portion of an asset that would previously have to have been sold as a whole to a higher value. Big Four firm PwC predicts global assets under management to reach $145 trillion by 2025, a massive market expected to welcome more investors and thus improve assets liquidity through tokenization. Okay, so let's see if I can get through a little bit of this Casper information here. This was a request. I do not hold any Casper. I was just asked to look into it. That is all, okay? Casper Labs seems to be a very, very powerful and solid company. I will be keeping an eye on them into the future. But I want to read these little tidbits here just to key you in. Now, of course, Casper Labs is a blockchain that is made for businesses, okay? It says here, Casper Labs, the company behind Casper blockchain, announced a partnership with Google Cloud. With Google. Listen, let me tell you something. When you see these big companies step in, sort of like how Google stepped in and they became a member of the governing board of Hedera, you know that company is serious business. It says Casper Labs will move a portion of its infrastructure over to Google Cloud servers, as well as provide developers working on Casper blockchain access to the cloud provider storage and hosting space. Then we go here, all right? It says here, Casper Labs and China's BSN blockchain partner. The partnership between Casper and BSN will bring Casper blockchain network widespread adoption. It says another article, Casper Labs unveils AWS Amazon Web Services partnership. This company, I'm highly impressed, right? Even IBM has something to say about them. This was an article from May 26, 2022. And just a little quote here. It says, it's from IBM.com, actually. It says, we are excited to continue our partnership with Casper Labs. But what I'm showing here is this company is taken seriously by massive companies. So they see the potentiality in Casper Labs. They have a lot going for them. So then I looked a little further. I said to myself, wait a minute, if Casper Labs is catching all of these eyes, I'm like, did they have anything to do with the World Economic Forum? Because usually these companies, these powerful blockchain companies usually catch the eye of the WEF. So I did a little digging. They've been at Davos the last 2 years. So Casper Labs, this is from CNBC.com. Casper Labs, a company that has built a blockchain designed to be used by business, is running a space on the promenade called the Blockchain Lab. Casper Labs was also present last year in Davos. Cliff Sarkin, chief of strategic relations at Casper Labs, said he's, quote, cautiously optimistic that the crypto market has bottomed. This is back then, okay? They're making powerful moves. It's very interesting to see this. So then you have this from CryptoSlate.com, IPWE or IPWE and Casper Labs converting 25 million patents to NFTs as enterprise blockchain usage grows. So let's read this little tidbit here. It says, during the World Economic Forum meeting in Davos, IPWE Inc. and Casper Labs announced a historic move to convert 25 million patents to dynamic NFTs. The announcement marks one of the most significant enterprise implementations of blockchain technology and the realization of a long-standing theorized use case for NFTs. IPWE is a digital intellectual property management company that provides IP services sorry about that. IP services through artificial intelligence and blockchain. If I misspeak from time to time, but I think you all understand what I'm saying. I am going to make mistakes. Casper Labs offers a business-focused proof-of-stake blockchain with a market cap of $401 million as of press time. They're making huge moves. 25 million patent NFTs. It says, IPWE is proud to announce, this is a quote, the minting of 25 million patent NFTs to foster the digital transformation of IP. IPV digital assets are a revolutionary technology and the true manifestation of the promise of blockchain for enterprise. So as of right now, it looks like Casper Labs is doing a good job. It looks like they're a solid company. I have a lot more research to do. I will continue to look a little bit deeper into Casper Labs, as I have done and as we have done many other blockchains before. This is very interesting, but this is where we will begin with the digging in deep of Casper Labs, okay? So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.